Good morning. Mackenzie Johnston with Tri-State Livestock News, bringing you your Thursday morning headlines concerning fair cattle markets. Sponsored by Sandhills Beef Company, American producers feeding Americans, because monopolies won't get us anywhere. To learn a little bit more about Sandhills Beef Company and all they have to offer, head on over to their website, www.sandhillsbeefco.com. According to the Global Times, demand and prices for domestically produced meat in China is continuing to increase as Chinese customers remain concerned with the safety of imported cold chain products. China's General Administration of Customs has reported that pork and beef imports in November were 330,000 tons, down roughly 70% from July. Beef imports alone fell 23% to 170,000 tons. Imported seafood, beef, pork, and poultry have repeatedly tested positive for COVID-19 throughout China. This includes imported products from Brazil, Ecuador, Russia, and India. As of today, only one positive case was reported from domestic meat products back in December. Since port workers are testing positive for the virus, it is becoming more and more difficult and time-consuming for imported products to be unloaded. Before the virus was an issue, unloading usually only took a day, but now it can take up to 2 weeks. Some storage companies have closed their warehouses to imported foods in hopes of keeping their workers safe from the virus. According to Yang Meng, owner of a large seafood importing company, recent cases of COVID-19 in Beijing is causing intense concern among people when it comes to imported cold chain products. 2 weeks ago, some big supermarket chains in Beijing began turning away imported products. The demand for domestic meat is greatly benefiting domestic meat producers, as everyone would expect. The average price for domestic lamb now exceeds lamb imported from New Zealand by 10%. The price has increased $4.60, and that's in US dollars, nationwide year over year. Reuters has reported that Dicos, one of China's largest fast food chains, has added a plant-based egg product supplied by U.S. startup Eat Just Incorporated based out of San Francisco, California. This fake egg product will now be available at more than 500 Dicos across China. Dicos' conventional egg patty that was used in their breakfast burgers and bagels will now be replaced with a fake egg alternative made from mung beans. Vegetarian alternatives to meat are quickly growing in popularity across China. Euromonitor International, a market research provider, forecasts China's meat substitutes market will be worth $12.3 billion in 2025, a sharp increase from $10.8 billion in 2020. Dicos is excited about this new, innovative food that will help support sustainable development for humanity in the future. Reuters has also reported that on Wednesday, Impossible Foods Incorporated reported that they would be cutting prices for food service distributors in the U.S. by roughly 15% due to increasing demand for its burgers. This is the second cut that the company has done in the last year, and they are asking distributors to pass on the savings to restaurants and consumers. This price cut brings the cost for the Impossible Burger to $6.80 a pound. Much higher than conventional ground beef, ranging from $2 to $3 per pound, according to the USDA. Impossible Foods will also be lowering prices on varying cuts for distributors in Canada, Singapore, Hong Kong, and Macau. The company reported that its production has increased sixfold since 2019. Finally, National Beef Wire reported yesterday that choice box beef ended the day at $205.27. That was down 63 cents. And select box beef ended the day at $196.08, and that was down 41 cents. That is all I have for you guys this morning. Have yourself a tremendous Thursday, and I'll see you guys tomorrow morning.